Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 8th of July, 2020, and we're about 5:40 in the afternoon. Number one, I got a haircut. Not bad. It'll look better tomorrow, but my hair's so curly today because my house, we still don't have air conditioning. We're hitting 90s and 100, and Chicago's going to 100 again next week through the week. I'll have the air conditioning, they said, on Friday. Fingers crossed. Window units, but you don't have them throughout a house this size. All right, so as we look at what the market is basically doing here, we had a day that held gains in the stock market, and you can see that it's staying up again tonight early. Energy markets flat, but we had bear news, in my opinion, in the EIA build of the oil, and the market didn't respond to bear news. When you get bear news and the market doesn't respond to it, pay attention. Dollar index is broken out to the downside, and we rallied dramatically in the currencies. You'll see that in a minute. And of course, gold pushed towards the 1830 level at one point today. It's pulled back, hit the upper Bollinger Band, and sank back from that. Now, the last settlement high on a weekly basis as we were coming down was 31.61 and a quarter, right there. So we have lower lows, as you can see. The week isn't over. We have 2 days left. While the market is up 37 points for the week, will the market settle over the 31.61 and a quarter to say this bit of the correction has run its course? That's what I'm waiting for, and I can't answer that yet on the chart. What I can tell you on the daily charts is you're still caught between this trading top, trading bottom, and you're just meandering back and forth in there. The market tonight did set itself up, and the word is tonight, Thursday night. It just made a higher high than the highs on Wednesday, so the swing line will be up. We'll have higher lows and higher highs. That doesn't mean you can't get a big reversal down. If you were to get under 31.2550 and close lower on the day, you would instantly break the swing lines to lower highs, lower lows possibly. You're at a very important area, but for the moment, you should have the bullish bias on the swing line. You're over the 18-day average of closes, which means the bias is up. And again, if you were to break down, I'd look for support here. But to get to that support, you'd end up with a pattern of probably lower highs, lower lows. Where's the resistance? You're facing it. That's why I brought this up to you. The Bollinger Band is your resistance point, this black dashed line. 95% of the time, the market will trade within those bands. Eventually it breaks out of them, but they're pretty wide still right here, so I don't know that you're going to do that right now. I see resistance with the market in an uptrend, and at the same time, we have an overbought condition. You are not embedded. In the NASDAQ, I see higher lows, higher highs, fully embedded reading. Still looks to me like a market that's trying to work itself higher than this. As I've said, as long as you have the embedded reading on the pullbacks, I think the pros will be there buying the market. Now, the fact that you made a higher high than yesterday already on the break, I don't know that you do too much other than let it break a day or so and see what you can get out of it if it breaks. I'm not saying it will. There's another element that's happened here. This is what I call when a market locks in on a Bollinger Band, the gorilla glue. It just doesn't get away from it. And I'm giving them a promo because it's a pretty good product. I use it. And as you look at this, I'm seeing the market just locked in on that and driving higher and higher. It's like a buying mania. It can continue to go. That's just how things work in these markets. Everybody thinks that with COVID, there's a new world order and it's tech. Whether they're right or wrong, we'll find out, but the market is valuing it as though it's true. When you look at the Dow, we're still in a downtrend. You have lower highs, lower lows. I told you I thought the pros were right here, trying to make a stand to keep the market from closing under the 18-day average, and they are. There's no reason to be short, but no reason to be long either. In the Russell, the market's got a pattern of a lower low, and that is, it may not look like it on the chart, but when you run it, you'll see that, and a higher high. Stuck now at the 18-day average, and now you're forming that pipe. And when you get sideways action, what happens is the market starts just churning people up. That's what I'm looking for to happen here. This is a good market to avoid until it breaks out one way or the other. In the VIX, if the market drops down to the lower Bollinger Band, which is 25.67, I expect the pros to write puts. And I think they're going to be looking to get back to the 18-day average of closes. That has happened on these occasions. Why shouldn't it continue happening? Until it's broken, it's working. In the bond market, we still have a pattern of higher lows, higher highs, but now we're entering, and I've been saying that I thought it was going to formed, past tense. We're in a pipe. See how narrow the Bollinger Bands get? You got to be careful. That's where I like to stay away. The market can churn there for who knows how long, and instead of getting follow through, you don't get any. You see the same thing happening in the 10-year notes. Trend is up, buy is up, market overbought, caught in what I call the pipe. In the dollar index, you broke out to the downside, and you hit the lower Bollinger Band again. Trend has been down. Lower highs, lower lows. I think the pros took some money off the table here. I think they're waiting to sell rallies. What they don't want to see the market do is get over 97.10.5, and because it's not embedded and just oversold, be cautious. This market has to literally start proving itself and breaking out to the downside. Otherwise, you can get caught in this position. I saw today Bloomberg wrote an article, or there was an analyst article about the death cross trade in the dollar index to the downside. I read the article and I fully agree. That doesn't mean it makes it an easy road, which means I still think the dollar lower. I've said that on the charts for a while to you. Euro got up high enough today. I think the pros took some money off the table. I think they're looking to buy the market on breaks after it decides what to do with the overbought condition. I am bullish that market, but too overbought. In the yen, is the yen going to be able to close over the 18-day average and also gain against the dollar? Right now, the battleground, the line in the sand, that 18-day average, even though the swing line's up, you're fighting that battle. In Bitcoin, higher lows, higher highs. I don't see anything to do with that other than what? What would you do? You're friendly. Until different, the pros are probably going to support the 18-day average. If it gets under 93.80, then they go back to the drawing board. But there's no reason to be short the way that I teach charting. In the Brent versus WTI, you're just hanging at this 18-day average, not going one way or the other. And as we look, we can see a market that's overbought in sideways action, upside bias, bullish trend via the swing line. A lot of resistance at 44.07, the upper Bollinger Band. WTI 41.79 resistance, overbought. Still caught very much in what we call that pipe, both of these. Same for the gasoline market, overbought, big resistance, 132.20. And in nat gas, well, tomorrow we're going to get the EIA numbers. They're expected only about a 56 billion cubic feet storage. That should be friendly. You're too overbought, in my opinion, to do much. And if you'll notice, you had one shot to come out at that upper Bollinger Band. Now from there, and if you come here and you take a look, that number was 196. This market's already down to $186, $1,000 a contract. Not something that you flirt with and don't pay attention to if you're a trader. You know, you have your checklist when you look at each chart. Technical indicators, volumes 1 and 2, PDF that we put together. Each one's about 20 pages long, full color, explains the different how to work with trend lines, oscillators, moving averages through it. You're going to learn money management, market sentiment, getting ideas to how these all work. Sometimes spreads give you an idea what the market's going to do. You go to contango, forward, Asian, there's different ways to look at it. Elliott wave, options, primers, it's all here. You can print it out and it prints out great. I know it because I put it together with our good friends at Modern Trader. Go to our website, www.iraepstein.com, and under the word, you'll see free offers, just click that. I'm Ira, you have a good day.